Let's talk about how to retire early, tax-free with 7 income streams. Because look, unless you want to work 40 hours a week until the day you die, then at some point you're going to want to plan for retirement. And so once you're retired, that means you are no longer working actively for your income. And so you transition to living off your investments that generate passive income and or fixed income. But look, whenever you receive any type of income, even retirement income, then you better bet that the IRS is going to want their fair share through taxes. And look, the last thing you want to do is retire, then find out that you don't have enough income after taxes, which forces you to go back to work. Hey Sean, look, I'm retired. Wait, what's that? Never mind. Because look, once you retire, then you may have to adhere to a strict budget due to having fixed income. And look, you can live on a lot less if you're not sending a big chunk of your money to the IRS every single year. So in this video, what I want to do is cover how anyone can plan for retirement. I want to talk about some sources of retirement income and how each source of income is taxed. Now, you may think this video doesn't apply to you, but I want you to imagine for a second that you are 80 years old, wearing a blue uniform and waving to people saying, "Hey there, welcome to Sean Mart." And so I implore you to start implementing a retirement plan early. Also, if this sounds like something that would be useful to anyone that you know, whether it is a parent or a grandma or a friend that is on the verge of retiring early, then please share this video with them and like it for the YouTube algorithm. Stay tuned. Hey there, and if you're new, welcome to our channel. I'm Sean with Life Accounting, the accounting company that helps people save on taxes and build more wealth. As always, I'm going to put the timestamps for this video somewhere down in the description below so that you can skip to the parts that you want to learn the most about. However, I want you to know that I have structured this video in a way that each point builds off the next one, so it is beneficial to watch the entire video. Okay, let's go ahead and get started with the first section of this video. Number 1, planning for retirement. Look, anyone can put together a plan to retire regardless of age or circumstances. The key is to put together a strategy that will allow you to do so. But here's the truth, okay? The earlier you plan for retirement, the more likely you are to retire early because you have a longer time horizon to save money and invest. And while retirement planning has some nuances, there are 6 core steps that almost anyone can take to start planning for retirement. Starting with step number 1, determine your lifestyle. So this is where you start to determine the life that you want to live in retirement. And this is different for everyone, right? Like some people may want to retire just to spend extra time with their family and friends, whereas other people may want to retire on an island and get some peace and enjoy great weather. And then other people may want to retire so that they can travel across the 7 seas. Regardless, this is important to think about carefully because knowing your retirement lifestyle will allow you to move on to step number 2, create a retirement budget. Because each lifestyle will require a different budget. For example, spending time with family and friends may only require you to have $2,500 a month in retirement income, whereas traveling across the world may require a $10,000 a month retirement income. So putting together a budget of what you expect your expenses to be will give you an idea of how much money you will need for retirement. So let's say, for example, you expect that you would need $2,500 per month in retirement income. Well, then you could estimate that you would need a $500,000 investment that grows at 6% per year. But of course, to get this initial investment, you'll need to move on to step number 3, make income. Because once you know how much money you need for retirement, there's only one thing left to do, and that's get to work. And your income is really the biggest factor that will determine how fast or how early you can retire. Now, there are several ways to make income, right? Like you can become a great employee or become self-employed or become a business owner or become an intelligent investor. Now, as someone who is self-employed and a business owner, I find that to be one of the fastest ways to become a millionaire and retire early. And I have a great video where I break down my journey to becoming a millionaire, which I'll link somewhere down in the description below or at the end of this video so you can watch that after you finish this one. Okay, step number 4 is to get rid of debt. Before you start counting up for your initial retirement investment, it's important to get rid of debt because, look, being retired is all about reducing as much risk as possible so that you can stay retired. And getting rid of debt, even your primary home mortgage, is a great way to secure your retirement. Okay, step number 5 is to save money and invest for retirement. And step number 6 is to have a tax plan. And I'm going to spend the rest of this video covering steps 5 and 6 in more detail because those are the methods that people will actually use to retire early. So let's move on to the second section of this video, number 2, retirement income streams. So when you're retired and you're not working anymore, where does the money come from? Well, there are 7 to 8 main sources of retirement income, and I'm going to go through all of them very quickly. Okay, so number 1, you have Social Security income, and this used to be the primary source of retirement income because, okay, nearly all working Americans contribute to Social Security when they work as a W-2 employee. But more and more people are becoming nervous about relying on Social Security income, and for good reason, because Social Security cannot continue to exist indefinitely without some major changes being made. The good news is there are rules being put in place to keep Social Security income going. The bad news is that it will be less generous to future generations. But anyway, the amount of Social Security income you receive is based on several factors like the age that you start taking the retirement income. And as of 2022, the max that an individual can receive is $3,345 per month in Social Security income. Now here's the breakdown when it comes to taxes. Okay, if you make less than $25,000 in Social Security income, then you get to keep all of that tax-free. If you make between $25,000 to $34,000 per year in Social Security income, then 50% of that is taxable. And if you earn $34,000 or more in Social Security income, then 85% of that is taxed. Okay, so for example, if you had $35,000 in Social Security income, then $29,750 of that would be taxed. So here's a tax tip. If you want to pay 0 taxes on Social Security income, then you would need to find ways to reduce your adjusted gross income. Okay, this means that you may want to contribute to a retirement account, which I'll talk about a little bit later. Also, that means you may want to itemize your deductions like your medical expenses, especially when you're older and you're retired. You may also want to reduce business income if you have any of that. You also want to maximize capital gains losses or any other tax deductions that may apply. Now, I have an entire video where I break down tax strategies for individuals, so I'll link that video at the end as well, so you can check that out right after you finish. But for now, let's move on to the next retirement income stream, number 2, retirement saving accounts. Now, the holy grail of saving for retirement is cashing out your retirement accounts, right? These are your IRAs, your 401ks, and other retirement plans. But here's the thing, okay? You can have a pre-tax retirement account or a after-tax retirement account. So a pre-tax retirement account is basically where you contribute income before you pay taxes on it. And because you do this, when you retire, then you would need to pay taxes when you withdraw from that retirement account. On the other hand, with an after-tax retirement account, you contribute income after you have already paid taxes on it. And because you do this, well, when you actually retire, you won't have to pay any taxes on the income you withdraw. So the tax tip here is obvious, right? Like if you want to reduce taxes in retirement, then you will want to have an after-tax retirement account that you're contributing to right now. However, this does present a problem because now you're going to end up paying more taxes today. But listen, just like you would have a tax plan in retirement, you should also strive to have a tax plan while you are actively working as well. And so if you want to learn more about how you can put together a strategic tax plan, consider working with us by clicking the first link down in the description below. Moving on to retirement income stream number 3, I have HSA savings. Look, in my opinion, health is wealth, and healthcare costs are likely to be significantly higher during retirement. So, of course, it's hard to save too much for it. According to a new report from RBC Wealth Management, the projected lifetime cost for healthcare for a 65-year-old is $404,253. And the healthcare cost could be even higher when you plan to retire due to inflation. Now, if you save money in a health savings account or an HSA, then you may potentially get a triple tax benefit because your own contributions go pre-tax, the money grows tax deferred, and if you leave it alone, you can take tax-free distributions as long as you use the money for IRS-defined healthcare expenses, which makes the HSA another great tool to add to your retirement and tax plan. Okay, moving on to retirement income stream number 4, I have investments or other assets. So Social Security income, retirement accounts, and HSAs all have contribution limits, meaning you can only put so much money into them before you max out any tax benefits. At the same time, they are most useful once you reach retirement age, which is usually in your 60s. But the real magic when it comes to creating a massive amount of retirement income are what I would call primary investments that appreciate in value over time. Okay, this would be investing your after-tax income into stuff like, stocks with normal brokerage accounts or rental real estate properties, or investing in your own business or other businesses and any other assets. So holding a certain asset over a long period of time allows you to take advantage of leverage and or compound interest, which transforms into exponential growth. And the golden tax tip here is to delay your income and accelerate your losses. And when you control these assets, then you can decide when you want to liquidate and trigger taxable events. And if done strategically, you could avoid paying taxes when you liquidate your assets when combining it with other tax deductions and losses, and even transfer assets tax-free or transfer your wealth tax-free to future generations. Now, if you would like to see me do a video on how to transfer your assets and your wealth tax-free to future generations, just tell me down in the comment section below. Okay, moving on to number 5, I have home equity. If you own a home, you may be able to generate income from the equity that you've built over time through making monthly payments and normal price appreciation. Now, there are 3 ways you could use home equity, and if you're like me and would want to stay out of debt in retirement, then your first option would be to sell your home and downgrade. And this may even work out great for people who are in the later stages of their life where they no longer need to live in a certain area, or they no longer need to live near their job, or they may not need a big home because the kids are gone. So assuming you sell your home for a profit, then what you could do is save and invest the rest for extra retirement income. Now, if you're in the late stages of planning for retirement and you need retirement income now, then you have 2 other options, which is refinance your home, or number 3, take out a HELOC and then budget for the debt and the expenses. The biggest tax tip here is to take advantage of Section 121 exclusions, where if you sell your home for a profit, you can avoid some of the capital gains taxes. Okay, moving on to retirement income stream number 6, I have pension income. Although pensions are very rare these days, they still exist, especially for government workers. A pension plan is a retirement plan that provides monthly income during retirement, and the employer is responsible for funding all the payments. Okay, a pension is usually based on an employee's tenure, their compensation, and their age at retirement. Now, if you have the opportunity to receive a pension, the 2 big things that you want to check for, especially today, is if your pension adjusts for inflation and if your pension rolls over to your spouse after you die. Okay, retirement income stream number 7 is a side hustle. Whoa, Sean. I thought you said I didn't have to work in retirement. You want me to get a side hustle? Okay, kind of. This is just a little nudge that if you have a hobby that you plan to enjoy during retirement, then consider turning it into an income stream, right? This may be you starting a chess club or starting some type of retirement sports league or even creating content like making YouTube videos or TikToks. So if you have a passion and you can make some extra retirement income, then why not? Plus, there are many benefits of working, especially in your older age, because it keeps your mind active and engaged. You keep your skills sharp in case you have to go back into the workplace, and you may get overall satisfaction in life by providing real value to other people. And the best part is, when you start a side hustle, you will likely be able to take advantage of business tax deductions, which means that you could also be able to enjoy your hobbies tax-free. Now, here's a very important note. There is no right or wrong way to retire. And you could use one retirement income stream, or you could use all 7, or just make your own recipe. Regardless, you should know there are risks and rewards of each path you take. Plus, remember, it's based on your own idea of retirement. So, those are my best ideas on how to retire early, tax-free with 7 income streams. Coming up next, I have 2 more videos that I mentioned I will link at the end of this video, so make sure you check those out if you haven't already, and I'll see you over there.